People tend to look at silver as an industrial metal think that it's substituted as an industrial metal for precious. It is not. The industrial demand for silver is on top of the precious demand. And the precious demand for silver is going up. China is an example of that. They may be pulling silver off the market to put it into solar panels, but they're also pulling silver off the market to invest in it because the people taking delivery of it are involved in the investment game, not just the solar panel game.
In 2023, the Silver Institute expects global demand for silver to slide down from the previous year's record high to 1.167 billion ounces. But the year may still be the second highest ever for worldwide silver consumption. VinceLanci, a renowned financial analyst, discusses the silver market as investors are going long on gold and shorting silver. He highlights silver's dual role as both an industrial and precious metal, appealing to investors. Much like silver jewelry, in 2021, silver consumption from the silverware industry recovered from the hit it took from the global pandemic, rebounding by 32% from 2020 levels. Demand for the metal from the silverware industry rose by a massive 80% in 2022, but is expected to fall by 24% year-on-year in 2023. Furthermore, he also predicts rolling short squeezes in the silver market, especially for commodity trading advisors, CTAs, shorting silver. In the short term, silver could retest the $22.23 resistance if the bearish sentiment continues. Meanwhile, Lanci foresees the Fed keeping rates unchanged, in line with market expectations of a dovish stance due to a lower likelihood of rate hikes. The Federal Reserve is expected to announce it will leave rates unchanged at the end of its two-day meeting next week, even though the central bank's preferred inflation indicator remains well above the 2% target rate. Looking ahead to 2024, he notes a 40% chance of a rate increase, but warns of the market's historic inaccuracy in long-term predictions. Now, we present the clips of VinceLanci's insights from his recent video at Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
On Friday, this came out, and that's a rather steep spike. Now, it's not as big as it was in the beginning, but you shouldn't expect it to get that big, but it's bigger than almost every other one. And given the rally in gold and the increase in gold open interest, I'm telling you, every one of those longs in gold is short silver. All those new longs have shorted silver. And what ends up happening is they sell silver because it works for copper. And here's why they lose so often, because it's precious. If I said this before, I'll say it again. People tend to look at silver as an industrial metal think that it's substituted as an industrial metal for precious. It is not. The industrial demand for silver is on top of the precious demand. And the precious demand for silver is going up. China is an example of that. They may be pulling silver off the market to put it into solar panels, but they're also pulling silver off the market to invest in it because the people taking delivery of it are involved in the investment game, not just the solar panel game. Anyway, what we talked about yesterday was it takes time to make silver rally. And frankly, just to go back to this again, this is pretty big. And what I mean by big is it's pretty persistent. They're being stubborn this year. And it seems like the more gold rallies, the more they buy gold and sell silver. So you're going to see during wartime, gold rally, silver rally, but not as pronounced as it normally does. And then it'll get to a point, and for some reason, they'll get freaked out and they'll cover. They could be freaking out because it's the end of the year. They could be freaking out because the war is getting worse, et cetera, et cetera. But here you have it. Silver's up 1.5% now, was up almost 2%. I want you to expect rolling short squeezes now, not massive short squeezes, but rolling squeezes. And that's because the CTAs are about to get their asses handed to them in silver. They should just stick to shorting copper. Silver is historically, we used to call it the devil's metal. And you can understand why if you're a CTA who likes to play short. So that's the first thing. The second thing is the Fed. This is Fed week, right? Okay, what does that mean? What does that mean? I'm going to tell you what it means. Normally, it's more uncertain. So I'm going to give you some certainty. Futures completely believe the Fed will not raise rates on Wednesday. The odds of Fed funds remaining 5.25% to 5% are 98%. The other 2% is for a cut. Okay, so unless there's an event, not a data point, unless there's an event that changes their mind, they will not change their mind. That's their baseline. Okay, so the next part of Wednesday's speech will be, will they be dovish or hawkish, right? Well, you don't know that, but you know this. The market is right now discounting them to be more dovish than hawkish. And the reason for that is because September's dot plot, September's rate projections last month pointed to one more hike before the end of the year. Fine. Okay. But the futures market, the market that is guessing if they will or will not hike, has saying that there's less than a 20% chance of that actually happening. So the market wants a dovish speech. If he gives a dovish speech, the market could rally, the market could stabilize. But if he gives a hawkish speech, which I don't think he will, but if he gives a hawkish speech, the market will probably take it very poorly. Okay, so as I say there, if Powell talks tough, that would likely be a mistake. All right, so for 2024, looking ahead, just getting it out of the way, there's a 40% chance of a hike, but we don't put too much credence in that because the market has frequently been wrong more than 90 days out. All right, so bottom line on the Fed, during times of chaos, Middle East war, Ukraine war, and especially with people more and more concerned about a recession, the Fed must not add uncertainty. It must project more stability than normal. Therefore, we believe, and I actually hope this, the Fed will continue to pause for as long as necessary, given the problems elsewhere.
During the interview, VinceLanci mentions that a typical strategy involves investing in gold or considering other precious metals to offset economic risks. On October 30th, Gold Silver tweeted on X, "Gold is set to post its largest October gain since 1978 and is currently holding the 2,000 level as we enter the seasonally strong period. Gold is currently up nearly 8.5% in October, with strength and momentum pointing to new highs." As per Lanci, ironically, investors are increasingly treating silver as an industrial metal, favoring gold over silver in their strategies. Silver has continued to underperform gold, moving higher on gold's coattails, but also reflecting that most demand is industrial, and growth remains threatened. Since the market's recent lows of October 6th, gold has rallied by 9.6% and silver by just 10.2%. Let's get back to the interview.
During times of war and times of overseas crisis, sometimes financial, you will see the macroeconomic type funds, the funds that are hedging political outcome, economic outcome, financial risk. You will see those types of funds allocate eventually, after getting their asses handed to them, you will see them eventually allocate money to gold. And they will also, because they believe they are very clever, and sometimes they are clever, they will allocate money into another precious metal in order to mitigate economic risk. So the trade that we all know about is gold versus copper, right? I'm buying gold and I'm selling copper because I believe there's going to be a recession. I'm buying gold, I'm selling copper because I believe there is a war. I mean, I see that there's a war, right? And those trades generally work out for them. Sometimes, more often than not, especially in the last 3 years or so, they're viewing silver as a much more economic metal. And in doing that, they're putting on gold-silver spreads. We saw it last year. We saw it last year 3 different times. We're seeing it again this year. And this year is rather stubborn, meaning they shorted silver, they bought gold. Gold rallied, they shorted silver and bought gold again. So you have 3 layers of people getting into this market. What does that mean? Well, it means that they are of the mind that silver is not precious and that it is industrial. And while its industrial use has increased over the years with, solar and solar panels and silver and EVs and what have you, and phones, it hasn't decreased in investment. It's just increased in industrial. So it's an additional demand. And so they buy gold sometimes, and they sell silver almost always when they buy gold now, and they think that that's a hedge. And eventually they lose money. Now it's hard to time when they will lose this money. Usually I'm pretty good at that. This year, my timing was too good, meaning I didn't think it would happen yet. But here we are. It's a day later and it's happened. The market could change its mind. But you have to understand, going into Friday, gold rallied, $1 billion, right? Silver rally, $500 million. And it did that because on Fridays during wartime, you have a contingency. You have a I need to buy before the weekend. I'm worried about the world ending. And then on Mondays, if the world doesn't end, you should have a sell-off. But think about it. Over the weekend, we had F-16 jets firing. We had missiles going in. Well, yeah, but the market came off. The market doesn't care about that. The market cares about what's going forward. There's another thing going forward, and I'm not putting too much weight on it, but Israel was going to go full boat into Gaza, and they seem to have not. And it's almost like they're taking advice. Not advice is not the right word, but they're in agreement with the U.S. that they shouldn't go whole hog in there. And they're going more tactical. And the market likes that as well.
According to Trading Economics' global macro models and analysts' expectations, silver is forecasted to trade at $23.90 per troy ounce by the end of this quarter. Gold and silver's recent performances underscore the complex dynamics at play, with both metals responding to economic conditions, industrial use, and investor sentiment. How does the evolving view of silver as both an industrial and precious metal affect your investment choices? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.